Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is April 24th, 2025, and we're diving into Xcel Energy's first quarter earnings report for 2025. Joining us is John, a senior analyst from Smart Stock Watch. John, thank you for being here.
Thank you for having me. It's a pleasure to discuss Xcel Energy's latest financial performance.
Let's get started with an overview of Xcel Energy. They're a major utility company based in Minneapolis, known for their commitment to renewable energy and infrastructure investments. Today, they released their Q1 2025 earnings report. John, what are your initial thoughts?
Xcel Energy has shown a consistent focus on advancing their energy transition goals. This quarter, they reported a GAAP and ongoing EPS of 84 cents, slightly down from 88 last year. Despite the dip, they reaffirmed their 2025 EPS guidance, which is a positive sign for investors.
Revenue and profitability overview. Let's start with the top line. Xcel Energy reported total operating revenues of $3.96 billion for the first quarter of 2025. John, how does this compare to last year?
That's a solid increase from $3.649 billion in the same period last year. The growth is primarily driven by higher electric and natural gas revenues, which saw increases of $150 million and $114 million, respectively. This reflects the company's successful recovery of higher costs and regulatory rate outcomes.
And what about their profitability?
Net income came in at $483 million, slightly down from $488 million last year. The decline is mainly due to higher operating and maintenance expenses, depreciation, and interest charges. However, the increased recovery of infrastructure investments helped offset some of these costs.
EPS performance and analyst expectations. Now let's talk about earnings per share. Xcel Energy reported an EPS of 84 cents, which fell short of the analyst forecast of 93 cents. John, what factors contributed to this miss?
The miss can be attributed to several factors, including higher O&M expenses, depreciation, and interest charges. These costs were partially offset by increased recovery of infrastructure investments. It's important to note that while the EPS fell short of expectations, Xcel Energy reaffirmed their full-year EPS guidance of $3.75 to $3.85, indicating confidence in their long-term strategy.
How should investors interpret this guidance?
Investors should see this as a positive signal. The reaffirmation suggests that the company is on track to achieve its financial goals for the year, despite the challenges faced in the first quarter.
Operational efficiencies and future outlook. Let's delve into operational efficiencies. Xcel Energy reported an $81 million increase in O&M expenses. What are the main drivers behind this?
The increase is largely due to higher nuclear generation costs, distribution system maintenance, and increased insurance and benefits costs. These are part of the company's ongoing efforts to enhance system resilience and mitigate risks, such as wildfires.
And what about their future outlook?
Xcel Energy is focused on building new generation and investing in system resilience. They have a robust plan to add nearly 5,000 megawatts of new wind, solar, battery storage, and gas by 2030. This aligns with their mission to lead the energy transition and meet community goals.
Leadership statements and strategic initiatives. John, let's discuss the statements from Xcel Energy's leadership. CEO Bob Frenzel emphasized their commitment to making energy work better for customers. What strategic initiatives are they focusing on?
Bob Frenzel highlighted their milestone achievement in February when Minnesota regulators approved a resource plan for significant renewable energy additions. They're also focused on mitigating wildfire risks through ongoing investments and regulatory support. These initiatives are crucial for their long-term sustainability and growth.
How do these initiatives impact their competitive position?
These strategic moves position Xcel Energy as a leader in the energy transition. By investing in renewable energy and system resilience, They're not only meeting regulatory requirements, but also enhancing their competitive edge in the utility sector.
Key takeaways. As we wrap up, let's summarize Xcel Energy's performance. Despite missing the EPS forecast, they reported strong revenue growth and reaffirmed their full-year guidance. John, what are your final thoughts on their investment prospects?
XCel Energy remains a solid investment for those looking at long-term growth in the utility sector. Their commitment to renewable energy and infrastructure investments is commendable, and their strategic initiatives are well aligned with industry trends.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Xcel Energy's performance in the comments below.